Morning folks, James here. Let's have a quick look at some of the markets, and I want to look at natural gas to start with. We had an interesting situation yesterday after the storage report. The market actually gapped down, back down towards the 200 period moving average and this order block. We've been short right from the top here, but we got hedged upon the support at the 100 period moving average here on the 4 hour. And then after the storage report, we had a big move down all the way to the top of this order block. Notice where the 200 period moving average is, and then bounced back up again. I came very close to actually exiting this hedge and adding more shorts upon this move down, but we waited for the 4 hour candle to close, and upon that close we were back above the 50 period moving average with a wick low candle. So we're still actually hedged on this trade, waiting for the next move. Notice that we are still holding the 20, the 100 and the 50 period moving averages in confluence right where we are right now, and also the 200 period moving average where we sort of almost reached and bounced off is still below us. So far I remain hedged on natural gas, locking in that 20-cent profit from the move from the top down. We're also short on WTI, looking for a move down back towards the bottom of this channel and much lower than that later on. I did cover all of this in yesterday's live stream, so please check that out and I'll link that at the end of this video. Now looking at currencies, we're long on the euro, long on the Aussie dollar, and short on the euro yen. As I said yesterday in the stream, I think that the dollar is probably heading down towards 93, and that would be a 700 to 900 pip rally on the euro, the pound, and the other majors. Because of that, we've chosen to go long on the euro against the dollar and long on the Aussie against the dollar. This one may have to play out, the Aussie one, a bit further to the right-hand side to make this pattern more symmetrical. And that could take another couple of weeks, actually. If you squeeze this in, you can see we could go a bit further. Any dips down to these horizontal lines could be considered good buying opportunities. Right, going across the stocks, big wick high, spike high candles on the NASDAQ and the S&P, and a big bearish engulfing candle on the German 30. Big rejections from those levels that we reached up into. We're still hedged on the NASDAQ. We got hedged on the breakout above that level. I'll be looking to exit that at 21,500. However, we're firmly short on the S&P and the German 30, and I also took profit on my MicroStrategies short trade yesterday morning. And finally, my QBTS short is still in play, looking for a move back down to the top of the channel. We got long there, we closed the long, got short over there at the top, and I'm looking for a move down through the gap to the top of the channel, the 20 period moving average, and then a resumption of this uptrend. And yesterday I also went short on Nvidia, as I said I would on X and in the live stream yesterday, but we got out of that trade on the return back to the top of the gap over there, so we're out of that one. Bitcoin just dipping down to that 105, 106 level as I thought it might, and still holding there. So just below the 20 period moving average on the day chart here, so the first signs of weakness. We haven't closed below the 20 since the 11th of April, so quite a long time before we've seen such a lot of weakness in Bitcoin. Nevertheless, it is a support level, just around about 105. Hopefully we'll bounce here. Still holding along on Ethereum and XRP. That one dipped down below its moving averages and trend lines and order blocks. Hopefully that'll recover as well. And then going across to gold, no changes. We're still hedged on short gold. We're still long on silver and still long on copper. Nothing to really talk about on this page. We're still long on the dollar rand. We'll probably get out of that one at break even. And we're still long on TLT. Same sort of sentiment on that one too. And then softs and grains, cocoa and coffee both moving down. Did quite a long segment on this in the last video and in the live stream. It's a members only live stream, by the way. So if you're not a member, you can join. There's a join button below for $1 a month. You can get access to all of those streams too. But we covered cocoa and coffee in some depth. We're still short on both of those. If you want to see the analysis, just go and check out that live stream. And we're long on corn and cotton. We're long on wheat, nothing on soybeans, and we're long on sugar. All of those just ticking up a wee bit yesterday as cocoa and coffee ticked down. So looking pretty good. So the immediate decision we have to make this morning probably is on natural gas and to see whether we can hold this level or not. And if we do bounce, I'll look to sell my hedge up into higher levels, looking for a move back down towards $3, my ultimate target. And if we do move down from here towards $3, I'll probably hold on to the hedge as well and look to exit the short side closer to $3 and then rebuy. Well, I hope you enjoyed that, folks. Have a great trading day. I don't think it's going to be a free fall Friday today in the markets. Last Friday was. Some of my viewers say, well, that's a juvenile analysis. But in my experience, we don't have two free fall Fridays in a row. So maybe, just maybe, the stock markets will tick up. If you enjoyed this video, please press the like button, the subscribe button, and the join button. You can join the channel for $1 a month and become part of the community. Take care.
Let's buy low. Ooh, yeah. High's the new move. Watch it flow. Ooh, yeah. Candlestick dance. Time it right. Ooh, yeah. Profit romance all through the night. Swing that.